Hi everyone, this is Chetan Pudar back with you again. There have been a lot of requests for people asking me how to invest into mutual funds. So I thought let me quickly do a tutorial as to how you can invest into mutual funds like a professional. Yeah. So first thing first, how do you invest into mutual funds like a professional? First thing, find the underlying asset or the index, which means suppose for example if you are investing into a large cap fund, then generally the index is going to be the Nifty 500, or it is going to be Nifty 200, or it's going to be a Nifty 100. You would also have mutual funds which specifically focus on Nifty. You would also have mutual funds which focus on Bank Nifty, pharma, or infra. So first of all, establish what is the index, and once you establish what the index is, then we can take decisions on that. Yeah. So what does that we need to do? The play of buy and sell is on the index. All the decisions go on in the index, which means whenever you are going to buy, the trigger is going to be given by the index. Whenever you are going to sell, the trigger is going to be given by the index. Yeah. For example, if you are going to be investing into a fund which is a pharma fund, or Nifty mid cap fund, or Nifty Bank Nifty fund, you have to notice that the master fund is always the master index is always going to be Nifty 50. Hence, whenever Nifty 50 moves, the fund is also going to move, even if it is not a Nifty 50 fund. So the play is always going to be on the index, which is the underlying index, but there is going to be an influence of the master index, which is the Nifty 50. So how do we go about doing it? The idea is to buy the mutual funds cheaper. That is generally the idea. How do we do that now? So first thing first, you put a MAR on the chart of the index. So like for example, if you are looking at trading mutual funds which are based on Nifty 50, then you put a MAR on Nifty 50 index. Put an RSI. Now the buying of the mutual fund will only come when there is a retracement. Yeah, and the retracement has to come to the higher MARs like 200, 300 or 365, which basically means that as the index starts moving up, we are not going to buy that, but the moment index is going to start retracing, yeah, that is the time we are going to initiate a buy. Now the buy initiation will only come at about 200, 300 or 365. It could also come at about 100. Yeah, so always use exponential moving averages for this practice. It always works. Along with that, what we also do is we also take our decisions by synchronizing it with RSI. So the buying will also come in when the RSI is at about 35 or below. Whenever the index goes below 35 on an RSI front, there is always a great opportunity for you to buy. So two things. One, buy at MARs which are higher, which is 100, 200, 300 or 365. Also start buying when the RSI is at about 35 or below. Yeah. Now since it's a long only strategy, but which means we really cannot go short, and in order to iron out the uncertainties which are into the index, what we are going to do is we are going to do a similar kind of SIP or systematic investment, except that it is not going to be on a confirmed time duration, but we will buy into the mutual fund every time the RSI hits 50 or RSI is below 35. Now, why are we looking at buying at RSI 50 and 35? Why not only at 35? For a simple reason that at times there is going to be a bull market, and when there is going to be a bull market, the lower level of RSI is always going to be 50. It is never going to be 35. So RSI, the band of RSI will move between 30 and 70 upwardly towards 40 and 40 and 80. Yeah, so 35 would also be considered as a oversold region. Yeah, so in order to iron out these uncertainties, we are saying that we buy at RSI 50 and RSI 35. Yeah. Now in order to get a more depth of buying decisions or increasing your odds, what we are going to do is we are going to synchronize the retracement to MAR with RSI. Yeah. So basically what you're doing is you're basically buying into deep corrections, and that is the basic idea. Yeah. in which case this investment is going to be termed as an investment which is similar to an SIP, except that it is not systematic on time, but it is systematic on whenever the retracements happen. One more very important indicator is that we need to observe weekly candles. Yeah, so the buying decision is going to be synchronized on weekly candles also, which means every time you see a hammer formation or a hammer type formation on the lower side, we are going to get into a buy mode. Yeah, so finally, what is the final system of initiating a buy? We are looking at retracement to MAR levels. We are looking at retracement to RSI at 50 and less than 35. We are looking at weekly candles for a double confirmation, and weekly candles essentially would be hammer or hammer type formations, or it could be what is called as haramis, or which is bullish haramis or bullish dark cloud covers, or bullish piercings, or bullish engulfings. So those are the candles which will give us the buying decisions on a candlestick level. Important to remember is only choose mutual funds which are based on indexes which are uptrending. Yeah, so don't get into a downtrending index mutual fund, because it is going to hurt you. So this is only applicable for mutual funds which are based on uptrending index mutual funds. Yeah. Also remember that if you are going to choose a volatile, faster, or a liquid index, it is always better. It will work in your advantage because it will give you more buying opportunities, which means you can technically make more money onto a bank Nifty mutual fund, or mid cap mutual fund, or junior Nifty junior mutual fund, or any of those mutual funds which retrace faster and give you better volatility. So thank you, but this is pretty much how it can be done. This is just the guidelines. Of course, we need to be having a lot more detail to make a lot more money, but this is the general guidelines which will be able to help you out. Right. So thanks and have fun investing. And this is a strategy for long-term investment, long-term investing. If you can do it, this strategy for the next 5 years or 10 years, there is serious amount of money to be made out of this strategy. Thanks a ton for this. What I'm going to do next is I'm going to show how the strategy works onto a chart. So I'm going to give you a demonstration on two. One is Nifty and one is Bank Nifty. So here we are on a chart now, and let's assume that you want to invest into a mutual fund which is based out of Nifty. And if you are investing into a mutual fund which is based out of Nifty, then this is the index which I'm going to look at, and this is obviously a Nifty index. On Nifty index we have put MARs, yeah, and you very clearly know what MARs are for. This is RSI below it. Now the easiest way to spot how to take a buying decision is looking at an RSI, and every time if you look at that RSI goes below 35, is that the prices start bouncing off. So here is RSI going below 35, it started bouncing. RSI going below 35, it's bounce. RSI below 35, it bounce. If you look at it systematically, every time RSI is below 35, it bounce. So this we are looking at an RSI as a major indicator. Yeah. So first thing first, look at an RSI, and when we are looking at an RSI below 35, this is where you are going to be taking a buying decision. Yeah. So this is one spot where we are looking at. Also, because Nifty has been in an uptrend, we are going to also consider investing into Nifty at the price of 50, because a lot of times you see that every time it touches 50, it bounces off. So this is the time you could have bought in, and this is the time you could have bought in, and this is basically to even out even out the flux into the market. So you can have an algorithm where you say that every time Nifty comes down to RSI 50, I'm going to put say X amount of money, and every time Nifty comes to 35 and below, I'm going to put 3x amount of money. So you put say 10 lakh rupees over here, you put say 30 lakh rupees over here. This is just an example. Yeah. So you have figured out the use of RSI for investing into mutual funds. You are looking at MARs. So which basically means that every time the price touches the MAR over here, this is where I'm going to initiate, or I'm going to be very closely watching the market or buying. This is a 365 days MAR touch. This is 365 days MAR touch, and I want to be a buyer here. I want to be a buyer over here. Now, what do we do with this kind of scenario? And this is where the RSI comes into play. One more thing, it is very important for us to know that while we are looking at MAR as an indicator and RSI as an indicator, we're also going to look at a weekly candle as an indicator. So every time you look at hammer type formations or hammers, or a cluster of hammer or hammer type formations, I am going to be going into a buy position. So this is also basically a hammer type formation, because if you add 3 of these candles, it's an hammer type formation. So I'm going to go into a buy over here, I'm going to go into a buy over here, I'm going to keep on going into a buy or at all these places. So when you are going to join weekly candles, hammer or hammer type formations, or bullish candles like engulfing, along with RSI and along with moving averages, this is a perfect system which you can have to invest into mutual funds for a longer term. If you do that for the next 5 years or 10 years, there is a serious amount of money to be made. So there you go, guys. This is the way you would be able to invest into mutual funds like a pro. It is not an active strategy, it's a passive strategy, but it does make a lot of money. Thanks and bye, and have fun.